Guys, it's quite the move down in the indices, quite the move up in bonds. Let's go over, let's do a quick flyby here of different stuff. I mean, this is, I mentioned earlier that I was doing the report up here. And so, my bias has been, okay, we're going to test the lows sooner rather than later. So as I'm doing the report, I'm looking at this, and this falls under the category of true confessions. So this is where I am. I'm writing the report right in here, okay? Or I'm recording the pre-market thing that I sent. And I look at this and go, okay, well, I'm biased to the short side. I'm going to put on a short, and we traded to like 89 or something. I said, okay, if it goes to 90, I'm going to put on a short, and I put an order in to sell the ES up there. And I left to take my son to his training. And then I get back. I sat, I watched his some of his training. Got back about 45 minutes later, and we just completely rolled out of bed. And here we are. So that's my, you guys bemoan the ones you miss. Well, I miss them too. Now that was a market condition trade. The level that I was trading against is this level. Just to let you know the rationale behind that trade. I missed it. Now, what I think is going to happen, and it's going to be interesting to watch the cash market. The cash market is going to trade, is almost certainly going to trade below the low. That is going to meet the requirement that I look for when I'm talking about breadth. Hold on, let me find it over here. When I'm talking about breadth going to a higher low, and this actually is the cash chart. So this is the S&P cash. So what I'm looking for today, okay, I'm looking for, and you're probably going to get it pretty early, looking for the S&P to do something like this, and I'm looking for breadth to do something like this. And that could set up a bigger bounce. Now, clearly, the June lows are going to, under this scenario, I don't think the June lows will be taken out before we get some sort of bounce. And I'm just sort of throwing out hypotheticals here about what could happen, et cetera, et cetera. But this is pretty much playing out to the form sheet that I had in my head when we had this extreme down day here. So we'll see how this plays out. This is a really good real-time test of this particular concept. Now, following that bounce, if we get some sort of bounce, it doesn't mean we won't go a lot lower. I mean, you had a situation over here very similar where this was your momentum peak to the downside. Then the next day we went lower on less breadth. Breadth closed somewhere in here. Actually, I've got a better chart that can show that. Hold on. Here we go. Okay, so over here you can see on this was on the 10th of October. We had a wide range down day, extreme breadth. The next day traded lower, and you can see right here on considerably less extreme breadth. And then you got a bounce. Now, we did sell off further, but this is a scenario I think that could be in play here over the next couple of days. All right, let's go on and look at some other stuff. Crude, favor shorts. I've been talking about favoring shorts. Gold. I talked about gold in the pre-market. You know, it's just, you can see it's just straight up. Mexican peso is coming in, formed a little bounce area up here, and it's just cratering at the moment. I'd favor shorts than British pound. The British pound, I would not be surprised to see trade below this level today. I would favor shorts immediately against today's session high in the British pound. Notes, favor shorts in copper. Notes, bonds. You know, I don't really know what's going on with the dollar and the euro. There's so many other opportunities at the moment. I'm just sort of watching this. You know, the trade war, the currency stuff that's going on. I'm between the euro and the dollar. You know, again, I don't really know what's going on, so I'm not doing anything there. Japanese yen looks positive. Australian dollar just broke below yesterday's lows today. I'd favor shorts again in the British pound, favor shorts in the Canadian. I don't really, not sure what's going on with the dollar and the euro, so I'd stand aside those. Silver, I mentioned silver maybe playing some catch up and may be a better trade than gold at the moment. We'll see. Grains, favor shorts in bean oil, favor shorts in wheat. If beans turn around and take out this potential buying tail here, or it is a buying tail, if they take that out, you got to be short. I would be cautious. I certainly wouldn't be short beans above this level of the fifth, the high of the fifth, whatever that is. 75, 74 half, somewhere in there. So that brings us back full circle, guys, to indices. It's going to be real interesting to see what happens when the cash market opens. Catherine, you there? Hey, you say, would 1330 be a realistic target? You ask. A realistic target for palladium? I don't really see anything in between. Yeah, I think that the next target for palladium is probably somewhere, you know, a realistic. If we get below this low, then I think you're looking somewhere between here, and I know this is a broad area, but 1340 to 1300 because of this volume over here. And you could see some pushback in here. But this is the area I would be sort of targeting if you're short from up here. Okay? Hey guys, something that's important to pay attention to in here right now. You have the Dow has traded below the low of a couple days ago, and the S&P cash has so far not quite. That's important to make note of here. So if you begin to get a bungee jump back, there's the potential to be putting in a low here, guys. You know, I don't like to, you know, I'm sort of conflicted here. I don't like to bottom pick. I don't like to top pick. But as I've said many times, the stock market is a little bit different animal because there are different indices, and I do pay a lot of attention to the relationship and the correlations in particular between the ES, the S&P, the Dow / YM, the NASDAQ, and the Russell. And, sometimes the Russell can be a big outlier, but the other three typically make important swing highs and tops at the same time. And if they don't, it's a heads up. So, you've had the Dow go to a new low. The S&P cash has not. Just, be aware. In 9 minutes or so, we'll take a look at breadth. I imagine breadth is quite negative at the moment. And at 10 o'clock, that's really, in my mind, the first good reading you can get, because by 10 o'clock, the overwhelming majority of stocks have opened. Right now, breadth is negative 1,800, which is well above the lows from the other day. But we'll see what happens in the next 8 minutes. Okay, let's look at breadth now. Breadth is negative 18. Let's call it 1880. So we'll record that up here. And then let's go over and look at, now I'm sort of watching the 10-day moving average. And the 10-day moving average has now finally come down to the level that we saw it in late May, early June, prior to this extraordinary bungee jump up. Now I'm watching the S&P cash very closely at the moment, because if it takes out now the session high so far, I would be reluctant about pressing the short side of the market. As I said, showed you guys earlier, the Dow has taken out its low of the other day. So that sort of meets the requirement of a lower low in momentum. And the other thing, obviously, to keep an eye on is breadth. I mean, if breadth now takes out this low at 22.98 or thereabouts, whatever this was, it's going to be a reset. And then what you're looking for maybe is a bounce and then lower lows on less momentum. It would really be, I think, very bearish for the intermediate term if we go lower than the breadth that we saw 2 days ago. Now, that would be not unprecedented, but it would certainly be a sign of an extremely weak market, the weakest market that we've seen in a long, long time. Guys, there's a decent chance we put in the low for the day. This is the SPX. For some reason, this is delayed, so I'm going to go to the spider, the SPY, which is real time and exact proxy for the S&P cash. Now you can see we did not go to a new low here. You can also see we're trading near the session highs. Now I'm going to go to the diamonds, which is the ETF proxy for the Dow. And you can see we took out the low. Okay, so we went lower on less breadth. Breadth is actually expanding now. We're at negative 1,400 and change. So I think we there's a reasonable chance we put the low in for the day. You could get quite the bungee jump here, guys, if I'm right about that. Hey guys, looking at grains, I would still be favoring shorts in bean oil. The better part of valor might be to sell it below today's session low. I would favor shorts in wheat, and I would favor shorts in beans. Now, I realize beans have a buying tail, but I would favor shorts in beans against today's session high in general. I don't know. I'm not as confident in corn, but you have a well-defined area up here to trade against if you're so inclined to short it. But I would, based on what I'm seeing right now, I would favor shorts in beans, and I would favor shorts in wheat, and I would favor shorts in bean oil, especially if bean oil takes out today's session low. Guys, hey, yeah, Greg, I just saw your post, and I was just as I was about to talk about crude taking out its June low. But yeah, there's nothing really. I mean, you've got some volume over here, but really with the break of this, you're looking at these lows, I think, 45 or below. Now, you could get a bounce in here at any time, but you want to be careful bucking this conviction in crude. I mean, if you get some sort of 5-minute balance area up in here, that might be a really, really nice trade. Hey, guys. Brett, I'll just show you. Brett is picking up here in the stock market. It's negative 827, but you can see it's turning up from today, actually. And as far as today is concerned, that's most important. We bottomed above the low on Monday, and as I pointed out earlier, the Dow cash did go to a new low, so that fulfills that box, checks that box. So this could be a catalyst for acceleration higher, guys. I wouldn't be fading this market at the moment. Breadth has been creeping higher and higher, and it's negative 623. So if we even get back to zero in breadth, you're going to just, this move could just take some people's heads off if it really gets going. It might take getting above, let's see, let's go over here. It might take getting above the Globex session highs, but I wouldn't be fading this for anything here. Breadth continues to act favorably. We're approaching, this isn't the best view. Let me get back. Okay, here we go. So the levels really to keep an eye on, we came up just at 2880 and backed off a little bit. But if you get through the Globex highs, and this thing could really scream higher still. So I wouldn't be fading this. Going through some other markets, bean oil is defying my wishes and is breaking back to the upside from the downside key reference area. I hate it when that happens. I would favor shorts in crude. You have a little, for those so inclined, you have a very clear upper extreme. Now, similar to yesterday, the better part of valor might be to sell it below this 5-minute bar. and let the market put you into the trade. Bonds, I mean, notes and bonds are coming in. That's not a hugely shocking thing. Everybody that's been trying to short bonds and notes from about right here will be very happy to get some relief if that happens. I'll wait. Heating oil, similar position as crude. I would favor shorts. Gold just, it just continues to trade higher. You've got to, you can't fight markets like this. I sent a piece out earlier. If you haven't seen it, when you check your email, you will, about being careful about fading markets because of sentiment and overbought, oversold types of things. Big mistake. Mexican peso, I'd still favor shorts. Bonds. All right, here are notes. Now, I mentioned this morning in my diatribe about sentiment and not fading markets, and I used the example of palladium as an example, where if I'm going to fade a market that's strongly up in a time frame, I'm not going to do it in this time frame. I'm going down in time frame. I didn't take this trade, so I don't want you to think, I'm not implying that I did, but there was a selling tail here. At least you gave you some semblance of something that is objective, that there could be at least an intraday top type of thing. Copper screaming higher, another market defying my wishes. Oh well. We'll have another chance to sell copper, I'm pretty sure. Again, I'm not real sure what's going on with the euro and the dollar. So I'm trading other stuff. Bungee jump underway in the Australian. Japanese yen is coming in some. British pound is balancing, but I favor shorts there. And then silver is quite strong. I mentioned silver in the report this weekend about it maybe starting to play catch up with gold, so that's working. And then the grains, I came into the day favoring shorts in wheat and beans. That's not proving to be fruitful at the moment. Certainly the bean oil trade is trading in the other direction. That's quick run through of some of the stuff we're looking at. Greg. Hey. Okay, what we're looking at here on my screen, we're looking at the indices. So let's just take the S&P, the ES, the mini. Now, when I say algos hate uncontested prints, it's not some, algos are have no feeling, they don't care. But the way the high frequency stuff works, and it works especially well in the stock index futures for whatever reason. And when Captain comes back, maybe he can explain why that's the favorite of the high frequency algorithmic traders. But if you watch the stock index futures day in and day out, I'm going to go down to a 5-minute chart. What makes the stock index future so frustrating to trade is that you get very, very, very few uncontested intraday runs, and this is particularly true in the intraday time frame. Something like this, and this occurred in Globex, is very rare. Even on Monday, let me go back to Monday, when we collapsed. I mean, this was a monster move down. But look how choppy it was. It's just chop up, chop down, chop up, chop down, all the way down. It was a huge day. It was the biggest down day in, I don't know when, over a year. But and this is why so many day traders lose money. First, all they trade is the S&P mini, and B, they don't know how to trade it. If you're using the shorter the time frame you trade, the more you're going to get into the noise, and that's especially true in the S&P mini. So this was a day where the market was just got obliterated, but even the traders that stayed on the right side of this market probably didn't make any money because of how they trade, because everything is so contested. Every single down move, if you get a down move, it's going to be retraced. And then you'll get another down move, and it's going to be retraced. So the Twitch traders who use super tight stops or are scalping, they just get destroyed. It's impossible to consistently trade with an edge when you're scalping the S&P mini. Now, that's what I mean by every tick is uncontested. I mean, we had the run up from here to here, and then you had this just out of the blue downdraft, and then they go up again. Now, who knows? You know, we've got some uncontested space in here now. I don't know if the big money is in here buying, and they're the only party that prevents this, that can prevent it. It's just when they get overwhelming in one direction, you'll see the market do this. But most of the time, I mean, this has been an extraordinarily strong move off of this low. But if you trade it the way most traders trade intraday, and especially the S&P mini, it's very easy to try to be long in here and gotten stopped out and not made any money or lost money. Hey, Greg. Now, here's something else in the interest of full disclosure, and I typically do not share trades that I took that work unless I called it in advance. I'm going to make an exception here. And the reason I'm going to make an exception is because I was talking about going long this market, and I was sort of pounding the table if you were paying attention. So I went long here, right here. And I put my stop, my initial stop was here, because I said, okay, you know, this is going to break strongly or it's not, and I want out. Well, it broke up here like this. So I said, okay, well, I'm going to raise my stop. Well, and Greg, you talk about one tick. This is where, you know, luck is better than skill. You know, when it went up here like this, I said, okay, I didn't put my stop at break even. I was in at 61, but I put my stop at 60. Well, I got lucky because that's where it really launched from. And then when the market went up here, I raised my stop again. And where did I put my stop? I put my stop at 67.50, which was right. I mean, 65.50, which was right in here. And again, I got lucky. Now my stop's at 72.50. Because I'm trying to give it some room. I have been thinking today that we would take this level out, and that's sort of what I'm trading for. So even though I tend to use market-based looser stops than your typical ES day trader, you know, it's still made it very difficult, and I've been lucky. I want to emphasize that, to still be in this trade. Okay, so that's that. Stopped out, and I still would not at all be a bit surprised if by the end of the day we turn around and take out the Globex highs. We'll see. I'm done. I'm not gonna press my luck, having been really lucky on this particular trade. But it just shows you how difficult the ES is to trade. It really is. You have to trade market condition. You have to trade development. What do I think is going to happen? And you know, I had a target of this level. And so as long as, in spite of the noise, as long as certain things didn't happen, I wanted to be long. And I thought I was using really, you know, pretty loose stops. But I still almost got stopped out twice by one tick. Now, this was a tighter stop than any that I've used following any previous swing high. And the reason is because we're so close to this level. This is an inflection point. You're going to get a sharp move away from it. And I wasn't willing to give up a substantial part of what I had made on the trade, on that part of it. So now probably going to screen through it. So guys, I have to take off for the day. I'm going to send a report out tonight. You guys have a great evening, and I'll see you tomorrow.